What's going on, everybody? It's your boy C-Zar with C-Zar Gets Crypto, and we are talking about Quant today, QNT USDT on Binance. This one comes to us at the request of ILY. ILY, we're talking about it for you. If anybody has a request for any coin, any stock, any whatever that they want to see some technical analysis done, feel free to leave it in the request section on YouTube. All right, without any further ado, let's get into this thing. What we have here right now, it's starting to look to me like an M pattern. I know that was a crappily drawn M, but you've got it right here. That was a little bit better. Something like that. From low to high, if this was an M pattern, I wouldn't assume that you see your extensions, just given the overall climate of the markets right now. Quant is a big player in the space, right? So I would think that, yes, it might drop this month with the rest of crypto, but I don't think it's going to have as extreme of a drop. I wonder, actually, from the top to bottom here, that's like an 18% drop. 786 is like a 20% drop. The average drop I'm expecting is like 34% within the month of November. So Quant being worth $1.5 billion, I think that would, as far as like the market cap goes, that's not what it's like actually worth. But I mean, technically, it's worth $102. But the overall market cap itself is that. With that, I would think that it's big enough to withstand a smaller drop, but still something like 20% from top to bottom. Where we are now, that would be another 13% down. Maybe we drop lower than that. It is possible that we could see these extensions, but I think we're in a pattern known as a harmonic pattern. It's known as the bullish shark pattern. And I want to go over the circumstances necessary for that pattern to be validated or like confirmed as a pattern. Anyways, looking at this here, I got it on Femex. Femex.com, they're talking about harmonic patterns for us from X to A right here. X is your starting point. Really, this whole line is A, and then this line is your B line. That's your C line. That's your D line, if you want to think of it like that. But X to A, start to finish there, would be right here, right? Because this is the beginning of your harmonic pattern. Now, generally when I draw fibs, I would take this low, but at this point in time, I'm going to take this low because this is your A leg right here, right? That's why I was pointing it out like that, because that's a better way to think of it, right? Don't go from the absolute low, because at that point, then why not include this? But anyways, went to our 0.5, just a little bit below it. Here we've got 382 to the 618, somewhere in that range. We actually found support right in that range, right at the 0.5, and now we're moving up. So that first kind of leg makes sense. The C wave should be, or C leg should be 113 to 1414. We are at the of your B leg, right? From top to bottom, we are right, in between, I'd say the 113 and the 1414, because that's your 1272. If I bring it down, let's see. 113. Yeah, you broke above that. So that works as well, which only leaves wave, or sorry, leg D, the D leg, C to D, that move, which if this is a bullish shark pattern, I know it's confusing because it says bullish shark pattern, and here we are talking about it going down. The reason why it's bullish is because whenever this is done, this is a buying setup. Overall, it's a higher low, which is a bullish setup in itself, and it's a failed M pattern because the M pattern itself should go lower. The second leg should be bigger, but whenever you get a failed bearish pattern, you get a bullish effect. When you get a failed bullish pattern, you get a bearish effect, So, so much so that I would think that we see prices higher than this, and where we could go from this, I guess it would actually be this high to wherever the low is. We would base that off of the extensions to come, but let's just see where that low could be. So that low could come in at 1272 to 200% of our B to C. So if we measure that, 1272 to 200% would be somewhere between about $91 and 200 is probably like right around a little bit below 80. Maybe or a little bit above 80. I'm sorry, I was looking at that. I was thinking of that upside down. Let's go to the 1886. I'm just curious. Where are you at? 2. For those of you that are confused, that's exactly what the 200% would mean. That's 2. It's the extension of 200% of this move, right? 100% is not an extension. It's actually just a complete retracement. That's why this is the 1. The 2 is another 100% from that. It's not 100% of a move, right? If you take this from bottom to that 1886, it's only a 15% move, but it's 100% of this move from bottom to top. That's why you get that line there. Just a little background. So that is at 81. 91 to 81 is where you can see this thing go. I wonder, just real quick too, from bottom to top, that doesn't line up with anything. You could see the shark pattern go lower than that. It's even possible as well, but I don't think it'll go that low. I really like that, you know, something down there. What does this say? 786 is the low. 786. I wonder if that's, does that make sense? Bottom to top here. 786 of this. The 786 comes in line very well with that 1414. That could make sense. Somewhere right around $90. Previous area that you found a little support there, resistance on this area, and then whenever you broke it, you had a nice move up. That could make sense. That's nice. I'm going to keep that line there. What is that? 90, or no, sorry. 89. Yeah, 89. Like 89 right there. Okay, so that could be where we see this move come into play. Now it could be a little bit higher, it could be a little bit lower. You know, again, the 1272 is at 91. The or the 200% level would take us lower than these lows here. But I'm kind of leaning toward the idea that this is going to be a higher low. I just wonder real quick if we were to go to 81. That still wouldn't be the average, so that's okay. I mean, I guess it's possible. We could do that. Quant could go lower than these lows, but at the moment I am assuming that we're going to see a higher low. And regardless, even if it is a lower low, the move that takes place afterward will take us to new highs. And probably, assuming that this is the low at the 786 where the 1414 and the 786 come into play, you could see it move up to about 120 to 123, somewhere in that zone, if not 130 even, actually, sorry, 120 to 130. That was the area I was trying to say. Yeah, that wouldn't be too crazy at all. Too crazy. So that's what I got. I guess that's all I got, man. It would make sense on the daily. Your RSI is looking a little bit weak right now. You're in this zone though where you could go up. I wonder, let's put this line here. I mean, you've wicked below it a little bit. I mean, if you were to draw it like this, you could go a lot lower. At which case, though, man, I would think if you went that low, you'd probably go to your oversold zone. You'd probably see this thing go, maybe you won't go to your oversold zone. I don't know. We'll see when we get there. One way or another, I think you go lower. I think it'll be swift. Your move up was swift. Your move down is looking to be swift at the moment. So we'll just see how decisive it is. But when it happens, probably a very good buying opportunity at this previous area of resistance, right around, what is that, $90? $89, yeah. That's what it was, $89. So I would probably, if I was looking to buy this thing, I would set buy orders a little bit higher than where I think it's going to go, just in case it doesn't get down there, right? And if it goes lower, don't put all your eggs in one basket up here. Wait for it to go lower and buy more. There's nothing wrong with DCAing. You shouldn't throw all your money in at anything at one price. You should definitely layer it through because you can be wrong and you will be wrong. And you can be right and you will be right, but it feels a lot better when you have cash as things are going down and you can buy more than it does whenever you don't. And if things are going up, you still got cash. So like it's really not a big deal. You don't have to be greedy and get all in at once. But if you do want to go hammer on this thing, maybe go to like 90. 90 is what, I don't know. This isn't financial advice. I'm not a financial advisor, so just do what you want anyways. But with that, I leave you, I think, down for now, probably around that $81 to $91 area with an emphasis on the $89 area. And then from there, up we go above these highs. And that could happen, again, that could happen in like 2 weeks. By the end of this month, we could be seeing the move transpire to where we have this down move and then we're starting our up move by the end of the month, right? Quite literally, it could look something like this. Like, yeah. Anyways, that's all I got. Take care. If you liked the video, leave a thumbs up. Subscribe if you'd like to see more. Thank you all for coming. Bye-bye.